124 years of history, the fourth highest valuation on record, and we're leading into Thanksgiving. What happens now for us as traders and investors? Well, in today's video, we look at where Wall Street is, where they're not, and obviously where the flows are going. Dark pool liquidity is showing us quite a few trades, and it helped us to kind of figure out that Bitcoin might have been seeing a sell. So far, we have seen a pullback. Will it get worse, or are we moving into altcoin season? In today's video, we take a look at all of that together, along with some significant movements from Wall Street's biggest money. Yes, a huge print in an asset class that not many people have liked recently. Are things about to heat up? Let's go through stocks, commodities, and cryptos right now together. This one's not to be missed. We'll see you in a moment. Well, welcome back everybody to The Daily Show. My name is Tom, and in today's video, we're discussing everything around markets. Obviously, a sell-off in Nvidia as 148, 150 remains too hot to handle, and Tesla giving up positive gamma, which were the interesting moves on the session for the markets. But generally, you'll see a sea of green. So let's talk about whether that will continue into the end of the year. First up, 124 years of history and a trailing PE that's starting to get up there. Are we the highest we've ever been? Well, no, not quite yet, but you'll notice that we're starting to lead into dangerous territory. And this will be something we're watching into 2025, so make sure to follow along on the channel, because while we remain bullish for now, and we'll talk about that in a moment, we will need to be watching warning signs, because remember, even one of the best investors in the world, Warren Buffett, has started to cash in. He's always early, but will he be correct again? Let's talk Thanksgiving though. We're leading into, of course, one of the best times in the year for people in the US, and I hope you have a great time with your family this year as well. Big shout out to you guys. But at the same time, it tends to be pretty good for markets. Monday, Tuesday, Wednesday, and Friday tend to bring in gains, and it's really more the Wednesday that you've got to be careful of, with 62.5% of the time percentage up, but obviously the average return actually being negative. But what you might not know is while there's a lot of cheer into Thanksgiving week, often the week after is negative. Only 33% of the time do we see bullish action the week after Thanksgiving. Then, of course, we lead into Thanksgiving to New Year's. Again, if you hold over the whole period, it tends to be pretty good. In fact, if we leave the markets from Thanksgiving all the way to the Santa Claus rally trade, generally around 80% of the time, you'll be up since 1950. So does this bode well for the market with current valuations? Well, let's take a look at what's doing well over the last couple of weeks, especially post the US election. And you guys know that we've been looking at financials, specifically the regional banks. Are they doing well? Absolutely they are. And we seem to be following a very similar trend to what we saw in 2016. Medium cap and small cap businesses are absolutely flying. And in particular, the medium cap that we'll look at later on today have been going absolutely bonkers. And there's a few reasons behind this. One, the November seasonality that we've talked about quite a few times that leads us to believe that we might be seeing a nice run in these markets all the way through to potentially March of next year. That's one reason. But the other is, of course, tax cuts potentially on the horizon in 2025. Yes, a lot of these businesses, especially in the middle caps and the small ones, don't tend to have the best financials. And we do have a debt wall coming in 2025 and 2026. Will they be able to refinance due to maybe easier financial conditions? Well, we'll look at how that's looking in a moment. But sentiment ranges continue to look really good across the board, guys. In many ways, we're actually climbing what's called the wall of worry. If we look at a month ago, we were looking at actually people being a little bit more optimistic on the markets than where we are right now. The latest sentiment survey reports, mostly from retail and kind of like semi-pro investors, is actually showing us that people are turning bearish on markets at these highs and at this recovery point. Now, of course, we are not doing that. We currently believe the markets are still looking quite good into the end of the year, and we specifically think the small caps will be able to make all-time highs at some point over the next couple of weeks. Now, why is that? Well, it's really about the wall of worry, and it seems to be appearing again when it comes to retail traders and investors like you and I. On top of this, we need to look at the Bloomberg United States Financial Conditions Index. It's pretty positive. This is not a bad sign for stocks, and particularly it's good for small caps and medium caps when it comes to moving forward. When we look at these types of market conditions, as long as this stays really good and it's above 1, that's all good in the hood. But do remember, this is a sign of caution. And as we mentioned in our Monday open stream, Remember to subscribe. We do a free stream every Monday. And if you ever want to join our private streams, you could do so. Links in the description and pinned comment down below for our Black Friday sale. But basically, this is the main thing that you want to be thinking about next year. The financial conditions are pretty lax right now. Things are going really well. But whenever we get up to these levels, there's always a period of significant underperformance coming, whether that's a recession, whether that's literally 2 years of nothing, or a significant pullback of literally a bear market. They're the types of things that we've seen over the last 2 decades. So do we think that things are good right now? Yes, but keep a healthy level of pessimism into 2025. A couple of other reasons why we need to do that. Take a look at 2024. We just surpassed 2021 in terms of flows. Yes, Wall Street's been buying and they're buying big time. US equity flow funds went up to $448 billion combined. And this is a huge deal, obviously bigger than 21. We know how 22 looked on the charts. And it just shows us time and time again that we're starting to get into that kind of last third, probably of the move of this current bull market. Portfolio weights are also dropping across the board. And what this is already showing us is what we suspected during really the last couple of months, that Wall Street is starting to move out of some of the Magnificent Seven stocks. In fact, funds have trimmed exposure to the Mag 7s in aggregate across the board in the third quarter, and they're doing so again right now. How do we know this? Well, you can see it in price action. If you take a look at any of the big Mag 7 stocks, they're kind of just like sitting there grinding higher at a very slow rate. And this tells you that flows have been moving into other areas. When we show you the charts later on, you're already going to see it. But don't worry, there's always more opportunity. Margin debt, we got a new read. Any problems? Not yet. Of course, we do look towards higher margin debt in the future, being something that I think will have a significant impact on markets for all of us as traders and investors. The market cycle also seems to be online with everything that we've thought about so far. You might think it's a crazy market, but realistically, we're just following a standard curve. In fact, we're right smack bang in the middle of a normalized bull market, and this helps us to gain confidence into 2025. So far, what have we got? We've got price action in the positive kind of movements here, especially in small caps and middle caps. And in the general market sense, we still have positive flows. So should we be terrified? Well, probably not yet. But let's take a look at another asset class that everyone has been scared of recently, which has been treasuries. Now, you may not know this, but November tends to be a pretty good month for treasuries. And I've been kind of leaving it because we hadn't seen a catalyst yet other than a couple of large transactions. But as it turns out, the US 10-year dropped over the last 24 hours, which was excellent. And we just saw a massive dark pool transaction come through. So it looks pretty good for treasuries, a huge transaction coming through right near the base. And this, of course, stacks with everything we've been talking about recently, significant accumulation. Remember what just hit the news a few weeks ago? Everybody saying they're going to sell treasuries. Yet, what are they doing? It doesn't really look like it's a sell with a cluster like this and a huge dark pool in a 2x or 3x treasury leveraged fund. So it seems like someone's made the decision to go bullish, and this is right off the back of the largest outflows that we've seen since 2020. Now, we all know that these are contrarian reads, and this is the type of thing that we look for here on the channel. We don't go with what the news is telling us. If it's in the press, it's in the price. That's one of the things that we like to mention here. And in this case, the data is negative across the board, yet the big flows seem to be building a position. At least that's what we're led to believe. More on that soon as we check out the charts. But let's move over to the other one that's a little bit contrarian at the moment, which is obviously Bitcoin. Now, do we like Bitcoin? Oh, yeah, we like Bitcoin. We've liked it, of course, specifically since it hit around that 50K mark back in August, but also we liked it really the end of September. As soon as that happened, the data pointed towards October, November, and December all being bullish. But something changed at the end of last week. The rate of change went up too heavily. We started to see a little bit too much FOMO, and I marked out all of these in time so you guys could see that, yes, some of them were the highs and the end for Bitcoin, but most of the time they were all coinciding closely with a pit, a pullback in time, or a correction in itself. And that means that we don't really suspect that there is a huge movement in Bitcoin maybe for the next month or so. A lot of people know that Thanksgiving also can bring a little bit of negativity to the crypto markets. We'll see whether that does occur again this year. But just remember, this isn't a panic point. It's just a point where the markets are having a breather. Do we still think that Bitcoin's going to 120, 130, or maybe even now 150? I've been upgrading it a little bit recently based on market capitalization size and what I think funds are going to end up allocating to it next year. So things are still looking pretty good. But as we mentioned, a lot of this has been due to large transactions. The second largest dark pool transaction came through. We spoke about this in previous videos where we've looked at so many different Bitcoin transactions and Ethereum transactions and all sorts of things. And you can see here that Bitcoin has dropped since that big trade. Does that mean it's time to get out? Well, not really, unless you're some kind of day trader that doesn't want to hodl or doesn't believe in the coins itself. But the same thing happened here with MSTR. Basically, we saw MicroStrategy getting huge transactions. It looked like it was potentially going to turn. Then someone just went bang, probably one of those funds that's actually trying to short it. And effectively, they pushed this thing down. And now we're trading it around this kind of level on the leveraged fund. But you can see here, they just kept doubling in and getting bigger and bigger and bigger as it went higher. And they were no doubt sells in this case. But does that mean that we've got a rise of the altcoins? Well, it's due for it. Around the middle of December, traditionally, we start to see Ethereum switch. And a lot of people think it's January, but I think it'll front run that because too many people think it's January. In my studies, it came out around middle to late December, but maybe it's already occurring. Ethereum net short puts continues to be very strong as the price action melts up. And yes, it is melting up. That is, it is slowly a dull market gain here, which we'll look at on the charts. Yet there are so many shorts still open. You know what that could bring? A short squeeze. So there's a potential here that Ethereum is starting to kick off. And while we still think Bitcoin is going to do well based on charts like this, could it be the start of alt season? I did some polls over on X. Most people hate Ethereum right now. In fact, I said, I think Ethereum is going to beat Bitcoin. And now it's looking pretty good because basically Ethereum was up about 5% since then and Bitcoin's down around 5%. So net, we're up about 10. But I said Ethereum would beat Bitcoin over the next 2 months. And overwhelmingly, everybody said no. Okay, now that's fine. Everyone's entitled to their opinion, but remember, we've got a couple of good things for Ethereum right now. The rise of the memes. You may have seen some in a couple of these videos. Basically, everybody hates Ethereum. Everyone says it's trash. Solana this, Solana that. Okay, fine. Then on top of that, we have too many people going short on it. Maybe we're going to squeeze as the market pushes up. And of course, we just don't have the faith in that particular coin because people are laughing at it for not making a new higher high already. And these have the makings of a market, and let me know down in the comments down below if you agree, of something that could be turning. And this just is because, remember, when everyone believes something, and when we did the poll, XRP, ADA, Solana, and Bitcoin were pretty much the highest scores. So that means that most people were literally chasing what has already been moving. Remember, we called ADA way earlier than it went up to, basically went up over 100 and something percent since we spoke about it. But this just shows you that people follow the herd. And in this case, I think Ethereum could be looking a little bit better. Of course, it may not be. It may take a month to get ready. It may take a month and a half. But I think it's looking a bit more approachable, I would say, than Bitcoin at maybe 94 to 100,000, unless you're looking at a longer term. Let's now move over to earnings season. We'll go back to those charts in a moment. Obviously, Thanksgiving this week, Thursday. And do remember, we have a couple of earnings here on the Tuesday for markets. Let's move over to rotations. Some good news for market bulls. When it comes to stocks, hey, home builders and construction is up. That's a great sign for the markets overall. It looks like a pretty broad rally. A lot of the regional banks, biotech areas, ARK-style stocks, all of those were up over the last 24 hours. And that, again, is a sign that this market is alive and well and breadth is starting to improve. We also see the last 5 days of rotation now have home builders in them and construction and bio. So really a pickup from where we were last week. And this is a good sign if you're a bull in markets. We continue to see the S&P 500 struggle with the core wall, which we'll look at in a moment. We all know 6K is a struggle town zone. Why is this? There's so many options above it. If we move above 6K and close, then we're going to be in positive gamma. But really, this market was just moving up and up and up over the last couple of sessions, and we've believed in that kind of move. The US 500 also shows here that it hit the options high of the last 24 hours. Now, I updated this live on the stream. I haven't got the new ones for you yet, unfortunately, because there's a little bit of a bug in the software. But generally speaking, you'll just notice here how much of a struggle the market's having with this 6,000 level. It reminds me a lot of Nvidia 148, 150, which obviously it did sell off from. But if we manage to close above here, could we be at 6,200 within a week or two? I think we certainly could. So remember the stats. Yeah, this week's generally kind of grinding higher. Maybe the tariff talk will drop the markets a little bit. That's probably what scared them over the last couple of hours. And in general, we have to be bullish. Next week, you could make an argument that we might say, make a new high, pull back, and then keep moving forward. That is certainly within the statistics. Why? Well, only 33% of the time are we bullish over the next week. So that is past Thanksgiving. However, into the end of the year, you get the Santa Claus rally and other stats that we'll be talking about. So far, so good though for the US 500. Let's have a look at the options market. Does that agree? Well, it kind of agrees with it. We've got a 59.70 put wall, and we're trading just above that at the moment. And we continue to have this 6,000 call wall. If we manage to break above 6,000, it's going to be huge news. But even the bears have to admit that it is unlikely at the moment that the markets are going to be able to get under 5,900. Have a look here at the 27th. 5,900, huge amounts of puts. 26th, huge amounts of puts at 59.70. The stats are still in the favor of the bulls. And that's just the reality in this situation with the options that we have moving forward. When we come over to Tesla, it dropped positive gamma. It still is technically in it, but it did drop it from where we were. And we were above 350 at one point there, hitting into 360. Now, traditionally, this is where you would expect markets to start to feed upon themselves, but it seemed like someone was taking profit. 350, 360, still positive gamma though, and Tesla still looks okay on the charts. Nvidia, on the other hand, looks really bad in comparison. I mean, let's be real, it struggled so many times with 148, 150, and for now, it's dropped the ball, making a lower low and moving into kind of this bad territory. I think ultimately it's going to hold up above 140 because we can see here once we get into December, we're moving to this 140 put wall, which may be a little bit strong, and I think the markets will try to hold around there. But for now, you can see like 135 probably is around the level of support where bidders are going to try to come in. And I think they're going to try to bid it back above 140, hopefully, over the next couple of sessions. We'll keep following that along. Should you be terrified of Nvidia if you're a longer-term holder, someone that's looking at the next couple of months? We don't think so just yet. So let's talk about US 10-year. This was the big news of the last 24 hours. It fell. Very good. That's actually good for the markets, good for the bull run. And it's started to respect our trend line. Now, that's excellent for, of course, Treasury traders. It pushed them up. We saw large transactions. And in many ways, it did the first of the great steps. It managed to close above the daily 20. And we've been talking about this for a little while, but Treasury traders finally get some reprieve. The best month, November, tends to be a pretty good month. Bad for yield, so yields usually drop. And we tend to see Treasuries go up, and it seems like it's a bit late to the party, but we're starting to see that movement up. So will we get through the bull zone? The first step is certainly there, and it has started to change trend. When we look at the American consumer, again, things look really hot. When we look at home builders, again, almost a new all-time high. Things look excellent underneath the hood for markets. And we've got to say that even the percentage of stocks above their 20, 50, and 200 moving averages, all of them are sitting where you could see growth. So again, things are still looking good underneath the hood, guys. US dollar did drop, then rally back up. Watching this very closely. For Chinese stocks, you're going to need it underneath 106. It doesn't look like China's willing to smash the yuan around too much. So the RMB in this case, unless we see the dollar go down, it's going to be very difficult for FXI and others to start to really move towards the upside. However, we will be watching. We'll talk about that market in a moment. But for US dollar, we're kind of in the middle of nowhere. 106, a level to watch. Gold pulled back due to dollar being a bit stronger and gold probably needing to pull back a bit. And this is an excellent zone. I'd be liking to see bulls here. Things so far really pointing towards gold doing well. I did expect a bit of a pullback. This is actually pretty excellent. This is an area I'd like to see gold bulls come through. Meanwhile, silver has been disappointing. Really needs to hold here, ideally for silver. But that is a struggle for this silver metal. It's right on support. Again, gold should find buyers here. Let's see if silver can do the same thing. And oil coming back to a very nice level as well to find buyers. So really, we've got trigger points here for potentially oil. Obviously, these are trades. They all have their own risk. Oil finding, puts a bit of a support here. We've also got a support on gold, and silver is hanging on for dear life on the trades at this stage. You can see here Tesla rejecting that main resistance that we've had for a while. Surprising. I thought it would hold 350 and close, especially after that. But yeah, there were a lot of articles talking about how many options were flowing. Maybe it is more profitable in this case for Wall Street to smash it around for a few sessions. Not too concerned with the Tesla chart for now. Nvidia, on the other hand, does look a lot worse. New lower low after obviously coming through. No real change of trend unless we get back underneath 132 though. And as we already saw, 135, 140, we still think that Nvidia is going to try to get back above those prices. So I don't think this is terrifying even with a close on its lows for now. Let's move over to China for a second. Iron ore continues its strength. That's a good sign. That shows you that the world economy is starting to see a little bit of growth in it. Possibly it's reinflation trade. And you'll notice here HSI took a low early this morning and it's rallying from that. So effectively China's trying its best. We're looking for more large transactions similar to treasuries. We've been waiting for that. We saw it just over the last 24 hours. I want to see some big ones coming in here for the FXI in America, and I want to see price action flows. Is this a good level? Hey, a trader or an investor may like this for Chinese stocks, but they're patient. If you're a trader, not trader, position-based trader or investor, not a trader. A trader is going to be like, no, I need instant reaction, and you're just not going to see that just yet. I just wanted to point out here that this is a very different tale. If you go to the Mag 7, they look like they suck right now. If you followed mid-caps, since we've been talking about them specifically after the election, when we've talked about small and mid-caps, have a look at them go. Absolutely flying from the 19th of November as well. 7.4% up. It's clear that Wall Street is rotating. And this is what most people, especially retail traders, tend to miss. And this is really important when we're looking at it because, of course, if you have a look at things like RK as well, showing you those companies that don't make money, those companies that have this random growth curve in them are starting to improve. Russell 2000 also improving here to a new all-time high? Actually, it is a new all-time high, I think. So very impressive, beautiful rally, excellent day trading. Day trading masterclass in the links down the description down below. This one would have paid for the course instantly. This is absolute replication to the buy side. If you do it, you'll see what I mean. And that is beautiful stuff. So great movement here into the first TP zone. Obviously, I still think there's more in the US 2K. I'm starting to project out for 2025 in this particular market sector. As you get more into a bull cycle, you have to go to more dangerous stocks. That's the reality of how Wall Street works. So yeah, we're in the mids and the smalls at this stage, and it looks like the rotation is here to stay for now. Let's move over to crypto. Ethereum, dull market. Doji, rejection. Doji. What is this? Well, it looks to me like a dull market that's on its movement up. Double bottom, movement up, big volume, heavy shorts. Is that a recipe for finally seeing the alts move up? We did look at Ethereum versus, of course, BTC, which is a favorite nowadays. I remember when I first got into crypto, I was using long short strats and people didn't know what I was doing, but nowadays everyone knows this type of thing. So obviously, if you look at the ratios here, you can see Ethereum is significantly underperforming. It's getting down there to the lower levels usually you see in bear markets. We saw a huge resurgence back in 21s and 22s into a 0.08, and since then a steady decline of Ethereum. Now you could argue this is Solana taking over, or in crypto worlds, I just want to basically make the argument of people expect something, it doesn't happen. And then when they don't expect it and they hate something, it tends to work. And the thing about crypto, especially in the alt market, not Bitcoin, is you just kind of have to be early. And you have to be sitting there because when the move comes, it's gone, especially in the smaller caps. And we've seen that with ADA and XRP, 50% in like minutes. So this is the problem. You've got to be early in these alts. Are we seeing a switch? Well, not based on ratio itself, but Ethereum, the actual coin, has started to improve. And I would argue that this is a significant movement to the upside, and it does point towards, probably trying to go for an all-time high at some point over the next month and a half. So I think Ethereum is starting to look better. Bitcoin, on the other hand, dropped down. I did a quick bit of analysis for you guys on this. And what I found was if you dump a couple of different indicators, specifically the daily 20, you end up getting a lot of 90,000. Now, we're not quite to 90,000. We're actually sitting on an anchored VWAP towards the upside here. But I think this case is probably where a lot of buyers sit. And worst case at the moment is probably around 80K. Do I think it's going to collapse into the 60s again? Not at this stage. I don't think that's going to happen. But this is, of course, pushing the markets down. And if we have a look at MSTR, you'll notice it got walloped. That was really a sign that Bitcoin's probably topping for the time being. Now, could Bitcoin go and prove me wrong and go to 120? Yeah, different time frames. If you're a trader, hey, maybe you're looking for a slightly cheaper price. If you're a hodler, someone that believes in this current rally, like I do, I wouldn't do anything, frankly. I'd just be like, hell yeah, it's going to go back up. It's all good for now, okay? So yeah, no real causes for concern. This is just the trials and tribulations of owning crypto. And in fact, if it works like it has in Thanksgiving areas, you might be seeing worse before you see better. That's no guarantee. And again, at this point, trying to time a couple of percent is kind of stupid when it comes to Bitcoin in particular. So keep, vigilant. Obviously look at stuff, but we'll be watching MSTR as well because they just bought a hell of a lot more Bitcoin included. Now let's move over to the news. We've got a couple of big bits of information. FOMC meeting minutes, 2 p.m. on Tuesday, obviously New York time. And as we scroll down, we've got the core PCE price index, some unemployment claims, and then we go through Thursday, which is of course bank holiday, Thanksgiving in America. And then we've got Friday, which is always light on in terms of overall volumes. So it's a short week this week. We do tend to see the stats that we've already presented. And just remember, in general, it's the week after Thanksgiving that you want to be more terrified of than this week if you are a day trader, or at least you need to be looking at it. Generally speaking, we're still bullish into the end of the year. Things are looking pretty good in these markets, and there's a lot of breadth to potentially be bought up. If you enjoy the show, make sure to subscribe, guys. Make sure to check us out on X as well. We're posting a lot of these charts over there nowadays. A lot more activity on X. That's been awesome. And if you want to find out more about how to replicate certain trades that we took last week, Russell 2000, absolute banger. You could have done it also on the S&P. Also, really gold, anything else. There's plenty of replication in these markets. Remember, guys, we come from the abundance mindset here on the channel. There's always another opportunity. And what we're good at is looking for the rotation. We watch Wall Street to see where the money flows are so that you guys can see how this really works. Bye for now. You have a fantastic day.